believe we are in the final stages of a 42-year secular bull market that will end in a final parabolic melt-up move. And I think we've started that, I think, last week with the reaction to Trump was the beginning of that. So I don't think he impacts that. I don't think it mattered whether, obviously, people were excited last week. But I think ultimately we were going to see this run into a top no matter who was president. The policies that he's going to be able to institute really don't impact, probably not even the next year much. So my forecast is a melt up into a top that'll probably stand for decades and a global bust following that, a global bust and 80% bear market potentially following that. My forecast hasn't changed based on Trump winning. I think Trump's impact is really the post-bust period, and the bust I expect to last 12 months or a little more. So it's beyond that in his last probably 2 to 3 years where his policies will make a difference. And I am not abandoning what I have in terms of a view post-bust, which is we're going to have a hyperinflationary environment ultimately and a commodity-driven cycle. I don't think he changes that. He may even enhance that. And then I think because of the debt in the system, if you get hyperinflation, you're going to have high double-digit interest rates. And I think you run into real problems in terms of funding the debt that you've issued through all these years. I don't think he's going to be able to impact that much. People hear me saying he was by far the best choice between the two. And they go, if he doesn't impact your forecast, how can you say that? And I go, well, he gives us a fighting chance to avoid a collapse in the 30s. Basically, if some of his policy actually work and we get back to pro-American, pro-capitalist approach, and we see a big cycle in terms of industrial growth, I think you could possibly change the direction of all of this. Rates may not go as far. You might even avoid the bust next year. You might have something less than that. And that would all allow things to maybe work out in a better way. But as far as I see right now, pretty much everything is baked in the cake because of decades of wasteful spending and debt that's through the roof. And again, it's not just the U.S., it's really across the globe. So it's a little hard for me to see where he's going to be able to stop that. But if anybody is going to, it's going to be him. I mean, he's really got a real plan to make some drastic changes in terms of the direction this country's gone for a long time. From a broader perspective, basically going from constant government solutions where you're basically expanding government and shrinking the private sector's solutions has been really the policy of the last several decades, even under Republicans. And I think he really wants to drastically change that. One of the big mistakes I think is being made in analyzing his policy, and some of it is because there's an awful lot of, Trump derangement syndrome in the media and in the economics profession, etc. So one of the bad analysis out there is that he's going to cause more inflation. He's going to cause higher deficits and bigger debt. I don't think that's true. A big part of it is because for many decades, we've allowed this view that supply-side economics doesn't work, that if you cut marginal tax rates, you can end up with less revenues and higher deficits. That's not been our problem. Our problem has been the excessive spending. If you cut rates, you're going to unleash the animal spirits in our economy, I think, and actually end up with, we've always had higher revenues when we cut taxes. So I think, and he's talking about some pretty dramatic cuts along with keeping the tax cuts he instituted in his last term. So I think you will see the potential where you could have higher growth than anybody anticipates, generating and also higher capital gains in the markets, generating higher tax revenues and therefore helping to bring the deficit down sometime. So in those kind of ways where I think a more capitalistic response, he's truly planning to go in and eliminate whole departments like Department of Education in the federal government, obviously with Elon Musk leading the way, looking to really cut numbers in the government. And people come back and say, you can't touch the deficits or much because so much is in entitlements. And that's all true, but I think people would be surprised if we run the government a little bit more like an efficient business, how much that could make a difference in the economy. Simple place would be climate change. You're going to see a lot of that spending, I think, get cut and eliminated. So there's places where you can come. Again, it's at the margin where you get the change. I think those that want to be skeptical want to look at the big pie and say, well, you can only cut this little slice. I think you'll be amazed. Just like what Musk did with Twitter. All the gloom and doom was that all those cuts were going to lead to a terrible service, and you really didn't notice much change in what Twitter was, in spite of cutting that big workforce. So I think that's probably even more true in the government. Obviously, he and J.D. Vance, their whole platform was basically a populist platform saying, we have to rebuild our industrial base. You know, the working man in this country was basically gutted out by these globalists. And I know 40, 50 years ago, economics was teaching this whole idea of comparative economics. You know, you farm out a lot of your things you could do at home, but you can do it cheaper overseas and it'll come back to you in spades. Didn't work that way. We gutted our economy and became a service economy. And all those people who were skilled labor and working men ended up, you know, the cities turned into places where people lost hope, turned to drugs, etc. And I think he really understands, as does J.D. Vance, that we need to get back to some of what we had before the beginning of the 80s. I think he means business in terms of bringing industries back on shore, trying to foster an economy, and also from a national security standpoint, understands by gutting our industries, we also lost the ability, if we ever go to war, to build up like we did in World War II. We don't have the steel industry we had then. We don't have the factories we had then. So it's kind of a dual-fold thing where he's planning to do both at the same time. And I think some of the numbers I'm seeing out of Wall Street, it could be pretty sizable in terms of its impact on the economy. So as I've said for a long time, I think the next cycle is, for the first time in 40 years, a cycle that's not consumer-led, it's industrial-led, because we're going to be building factories, building plants, obviously semiconductors, but a lot of other things too. And what do factories require? They require a lot of commodities. All of that is going to mean a very different cycle for the markets, because we're so used to it being kind of, you know, buying things that benefit from lower interest rates, a disinflationary environment, consumer spending. I think coming out, if I'm right about the bust, the consumer is also going to be digging out of a big hole from, you know, loss of wealth. I think home prices will be down substantially. So say 2026 to early 2030s cycle is going to be a very different cycle, more like the late 70s and early 80s, or more like the second half of the 70s and the early 80s. A lot of the so-called Chinese miracle was just massive debt funding. They just printed money and blew up their debt. And so all the growth of the last couple decades, and then they expanded into a lot of these industries that they took from us and elsewhere, and basically said, we're going to play a market share game for a long time. We're going to basically shut down our competition and flood the market with all our products at much cheaper prices. And obviously it worked for a while, and they took all that money that was coming in and they built new cities and didn't care if people were coming into them yet. They just kept building. And that, again, produced GDP or whatever they call it over there. And then now all of a sudden you've got the other side of that equation, where you've got real estate empty all over the place. You've got people who use that real estate as their savings. All of a sudden those real estate deals are all failing, and they're, you know, so people are in tough straits. So there is reason to wonder whether, if we get my global bust, they're going to be hit harder than anybody. And particularly, and again, if we're going to reshore, they're going to take it on the chin there. So there is reason to wonder whether that is true, that maybe they will become what Japan was back in the late 80s and go through a long period where they've got to digest and figure it out and come back in a sounder place. But on the other hand, I am calling for a global bust that will hit the world. And what I think is very predictable, if we get that bust, is that every central bank is going to blow this system up one more time, and you're going to see money like you've never seen before. So $5 trillion was the Fed's response to the pandemic. Right. I'm predicting $20 trillion this time to a free-falling financial system around the world. That something has to be done. It'll be money. And every central bank will be doing something proportionally similar, including the People's Bank of China. So they may not be at that point where they're so saturated with debt they can't do it again. If we blow up the system with money again, they might be a beneficiary of that one more time. I think the U.S. will be, but I think maybe the world will see it. The problem is it moves very quickly from a big rebound out of a huge bottom in the markets and the economy. And within 2, 3, 4 years, it's hyperinflationary because of all that money, and because it'll be a commodity-driven economy around the globe. You're going to see $500 oil. You're going to see gold at $20,000. You're going to see silver at $500. You're going to see copper through the roof. You're going to see natural gas at $30, $45. $50. It's not something that can last very long. You'd then collapse. So that's what I say in terms of saying maybe Trump can alter that somewhat, particularly if we don't get a true bust. But it's going to be hard for any policy to overcome what I think is going to be macro trumps China, macro trumps everybody. As I say, in 2008, when commercial paper market froze up and we almost saw GE go under and AIG was going under, etc., our policymakers acted just in time to pull us back from the cliff. So it wasn't a bust. It was a great recession. It was very bad. I think this time, because of 2008-9, policymakers are going to be very slow to react. They're going to say, we don't want to do that again. And I think this time we can go over the cliff, and that means a bank crisis across the globe where bank failures are dominoing across the globe, and there's only one way they can respond in any kind of meaningful way in a timely fashion, and that's printing money. So that's why I think we get that. If we get the scenario that I'm calling for, which is a banking crisis, a huge banking crisis. I call this the end of a super cycle, the big cycle between two depressions, 1930s being the last one, I think the 2030s being the next one, that what happens coming out of 1930s, you have, basically you're coming out of a huge bottom where there's no excesses, people have been hit hard and you're just coming out. You then cycle to cycle to cycle, you just see higher excesses each cycle, or more debt each cycle, more inflation at the top of each cycle. And what happens is the response to pull you out of the excesses becomes more excess each cycle. So
it has to be.
Yeah, each cycle you get to a higher peak in debt, a higher peak in inflation, and the medicine it takes is also accelerating. And so when you get towards the end of a super cycle, it goes to levels you just never would imagine. That's basically where I'm coming from. I think we're at that point where I can see the forces in place. The mentality is, Powell has said this, we're not going to go back to QE again. And all of Wall Street says, we're not going to allow you to go back and blow up the system again and just print money, have 0% interest rates, etc. And these things come quick, as we know. In 2008, in middle of September, I was the only one talking about a hard landing. Everybody was soft landing, no recession in sight. 3 weeks later, we were in the biggest crisis we had had in the post-World War II era. Lehman failed, and here we were. So these things can come on fast, and you may not see them coming. But if you're faced with a crisis like that, you don't have a choice. Your two choices are, we're not going to do that. We're going to watch the global system just fail, collapse, or we're going to respond because we can, which is what any human being is going to do, and which our policymakers are going to do. So they can have good intentions of saying, we're going to do this kind of like they've been doing and manage it carefully. We're not going to pump up the banking system again with money. But the problem is they aren't foreseeing what I think is coming, which is that global bust. And they're going to be deer in headlights, in my opinion, where they're going to be in a moment where they say, we don't have a choice, here we go. And that's what starts the whole next decade moving towards a total collapse. Because what you get at the end of the recovery cycle that follows this is inflation that could be in this country 25%. And I'm talking about sometime in the early to mid 30s. And I'm guessing the 320 trillion in global debt will have grown to something like 450 or 500 trillion, most of it in response to the bust. To get us out of the bust, it'll be both money and government fiscal spending. And so you're going to be looking at debt deficits way beyond even what we see now, with interest rates to service that are way beyond anything that you can't draw up an equation of any kind. Modern monetary theory is out the window. There's nothing you can draw up to say we can manage this. I don't see how you do. And people will say, well, why don't they just forgive the debt? I go, there's somebody on the other side of that debt. You can't just say we're wiping hundreds of trillions of dollars off. There goes people's investment, everything. Institutions will be bankrupt. There's two sides to that equation. What I think happens at that point is a collapse. And again, that's I'm jumping forward to, say, 2033 or 4, somewhere out there. But that's what I think this, each step leads you to the next piece.